Well, with everything going on that we discussed in our earlier segment, let's see how the markets are opening up here. I know you're all waiting. Let's dive right into it. On the corn market, with our quotes provided by Bar Chart, we are currently seeing December corn 12 3/4 higher. We're at 693.5, about 2 cents off of our overnight low, but still about 6.5 cents off of our overnight high as well. Soybean trade, let's move over there. We have January soybeans now 4 3/4 higher at 14.05. Actually, kind of a muted start here to get things rolling the way it appears. Now for the wheat. All eyes were on wheat over the weekend with the Ukrainian situation. Here we go. In Chicago, December 48 higher this morning at 877.25. Believe it or not, that's about in the middle of its trading range from overnight and early this morning. Kansas City wheat, December 47 3/4 higher at 972.75. Still a dime off of our overnight high, but it is actually firming up. It sold off at the open by several cents, and now it's bouncing back, and now it's basically at the high of the daytime trading session here. Okay, on Minneapolis wheat, you have December 37 3/4 higher at 982.75. Well, I want to bring in Mr. Dewey Strickler of AgWatch Market Advisors. He's in Franklin, Kentucky. Wow, there's a lot to chew on this morning, Dewey, with all the news over the weekend here. How do you rate the open so far?
Well, actually, I'm a little bit disappointed in soybeans, but I really kind of expected that. This entire trade range we've had here for the past few weeks, we just barely nudged above it today here, and I think beans are going to eventually move lower here. We're looking at a great crop here, a large crop in South America, especially in Brazil, that's on tap here. So that's my thoughts on that. And as far as what's going on in the Black Sea region, I think you're going to be looking at one or two things happen here, Marlon. I think, first of all, Russia will do – they have two options. One is they'll let this thing slide and use it as a threat. The other is that Turkey, who initially brokered this deal, will try to get the two parties, Putin and Zelensky, back to the bargaining table, because both sides would like to see this end. They just want to save face, and that's going to be the obstacle standing in the way, trying to save face and get an agreement from there.
All right, what about the situation on corn? Ukraine is a big corn producer as well. Some of those ships out there, I don't know, we talked earlier about how at least 12 ships made it out since yesterday, but we don't know exactly what they were carrying yet, do we? It could have been some corn.
It could have been corn. Here's my thoughts about corn. We're going to have to see our exports get stronger here. When you look at the current pace of shipments, they're running 29% below the 5-year average. Well, now we got an opportunity to get them going if they do not abide by the agreement. The thing is, we got to get some export business going here, or corn's going to back off.
So longer term, are you more friendly on the corn market, or are you more friendly on soybeans if you had to choose between those two?
Well, at the moment, I'd be more friendly on corn.
All right. Now, that kind of puts our livestock producers in a bit of a bind. And we'll talk about that in just a little bit after a break. But in the meantime, we were talking about the river situation and the inability to ship corn and soybeans on the Mississippi River. I hear the basis levels are just really eroding fast out there in the countryside.
Yeah, that's correct. And they'll be that way until we start getting some meaningful rainfall and get these water levels higher.
And that's not just on the Mississippi, is it?
No, it's on the Ohio as well, too. There's several rivers that is happening, too.
Yeah, I've heard all kinds of stories. Although you go into the far western Corn Belt and the High Plains area there, and the basis levels have been remaining very strong because they can't get the grain that they couldn't produce this year. Saw a picture late last week of a unit train at a facility where they never have unit trains because they always grow enough normally. All right, we'll come back in a moment, and we'll take a look at the livestock side of the equation, how we're opening when we come back. All right, let's open up our livestock trade here on a Monday. Happy Halloween to you. And, well, the markets, are they going to be spooky on the livestock side, or are they going to have a bit of a treat for us? Let's take a look on live cattle. Here we go. The quotes provided by bar chart show that we are lower. December now down 97 cents. Make it 95 lower now at 152.05. We're off of our early high this morning by about 70 cents already. February down 80 cents at 155.52. On the feeders, a lot of concern about what feeders are going to do with the surging corn. Well, as you can understand, you have the November feeders down $1.72. Look at January, down $2.07 already. We're at 178.25, make it 212 lower now. It just changed. And we had a high early this morning of 179.37, and now we're already about $1.15 off of that, the way it looks. Now let's move on to the lean hogs and see if we can find any strength there. Boy, it's minimal, but it's all on the deferred contracts way out there. December lean hogs, the nearby contract, are down 15 cents at 85.95. February down a nickel, but the deferreds, well, it's interesting. April is 25 higher at 92.95 right now. Let's go back to Dewey Strickler here. You know, on the cattle market, I've been watching that, and it seems on a chart like they were making highs. They made new contract highs here a few days ago, but it just has that look, especially with the pressure from higher corn today. It just has that look like maybe we're looking at least a short-term high. What do you think of that?
I think we are here. When I look at Elliott wave terms here, one thing I do not like, and that is the market has gapped a bit lower here this morning, but this sort of looks like a wave 4 pullback, and if it is, we should go up and set a new high. But the thing is about the cattle here, when you look at the meats in general, what's a consumer going to do? You know, we're really seeing that these higher prices are getting into their wallet here, and someday, you know, the rubber's going to meet the road.
All right, so if that's the case, what about on the hogs? They also looked kind of toppy here in the last week or two.
I do look for the hogs to continue lower here. I think we could see them possibly go down into about the 82.50 area basis of the December contract.
All right, now I know you follow the outside markets as well, and we are going to have the Fed meeting coming up at midweek, trying to set the new interest rates. But I see the dollar index is firming up here today. December up now over 700 points at 111.310. How problematic would that be for the ag trade now?
I think it's going to be a problem here because I think what we've done, Marlon, we've set here about 3 or 4 weeks ago an intermediate term top in the dollar. And I do look for the market to go up and set a new high on this and possibly an all-time high. And if that's the case, it will impact grains. It's going to impact meats as well.
And also looking at the chart on the Dow Jones Industrial Average, you can tell it has had a sharp rebound here in recent weeks. One has to wonder how much follow-through there will be. Right now, it's down 236 points. Dewey, great information. Thank you for joining us here on a very busy Monday. Dewey Strickler of AgWatch Market Advisors. Janet, the markets are off and running. Here we go.